Chairman sir, good evening.
Hey, good evening, sir. Good evening. How are you?
Absolutely
Hello,
good,
sir.
yeah.
Nice to
Good
see you,
evening,
sir.
Vishnu.
Good
Good evening.
evening, sir. Good evening, Manish. How
Good
are
evening.
you?
Good evening. Ekdam fine. Very good.
Thank you so much for consenting your valuable time for address to the charter accountants.
Sir, it's my
We are
pleasure.
really, we are really thankful that you are always with us whenever we required.
Always, sir.
Uh,
My pleasure.
uh, uh, who is the coordinator?
Good evening, sir.
Rashi.
I'm unable to see you.
Sir, my video is on.
Yeah, okay. Uh, People will join. Ashi, your background is very blackish and very dull. Can we please be in proper
Just a
light?
second. Yes, sir. Sir, is this better?
It is better. It is better than the previous picture. Uh, Now, without wasting time, I request Asi to please take the proceeding ahead.
Sure. Namaste and good evening to all, one and all present here. I would like to thank you all for joining us today for another enriching session of Golden Charcha. I'm CA Rashi Sonthalia and I have the privilege of coordinating today's session. Golden Charcha has truly emerged as a golden initiative by EIRC. It brings cutting edge knowledge directly to our screen. This initiative reflects our commitment to continuous and professional development and ensuring that every member of our family has stayed equipped with the latest tools and techniques. Before we proceed, I would like to express our heartfelt gratitude to CA Vishnu Kumar Tulsian, our dynamic chairman of EIRC, whose visionary leadership and commitment to professional excellence has made this initiative like Golden Chacha possible. So your leadership inspires us to reach greater heights. And Golden Chacha stands as a testament to your commitment to our professional community. I would like to hand over the mic to our chairman, C. Vishnu Kulshan, and thank you for joining us today.
Thank you, Ashi. And once I would like to thank you that you personally came to the institute and offer yourself that, sir, I want to serve to the institute. So this is a very good initiative, a very good attitude of yours, which we could realize. And I think this is the first time you initially passed and immediately took this challenge. So I really salute your initiatives. Thanks so much.
Thank
And
you. Thank you
this
so
is the
much.
objective of Golden Church that should give the opportunity to young chartered accountant, another chartered accountant who has never been on the ERC platform. And by this way, we can give the opportunity because you are the future of country, you are the future of Eastern India and the future of ICI. So this objective, and also thankful to the Manish ji and Udeshi for coming forward. And they're always very much active and supportive to the CA Institute. And basically, I'm getting the blessings and their support always whenever I require. With these remarks, I will not take much time. Would like to just appeal to all of you. Please come forward. Make our ERC a vibrant ERC. I am the chairman of 30,000 chartered accountant of the Eastern India in from each village to uh, all the places. So please come forward. Golden Jubilee Conference we are holding on 21-22nd November. So please come forward and help the ERC to be the best region in the India. So thank you with that. Over to Asi.
Thank you, sir. Today we have with us a distinguished guest speaker, CA Satish Udeshi. I would like to extend a warm welcome to you, sir, and respectfully request you to say a few words.
Thank you, Rashi. Thank you, Chairman sir, Vishnu Bhaiya. It's like good evening to everyone. It's beginning by saying that Golden Charcha has totally taken a different platform altogether, where the experts are, coming together to share their experience and knowledge, allowing to members to gain their valuable insights. And it's not just an initiative that truly strengthens our community and foster our continuous learning. So thank you so much. And today we are actually having explore a topic that lies at the core of the modern business valuation. That is the power of cash flows, especially as seen through the lens of discounted cash flow method. DCF method, small approach, is built on the powerful principle that we all know, that is the value of a business is determined. So not by its past performance or accounting profits, but by the future cash flows it can generate. So how can we adjust for time and risk is also a big understanding for any projections of cash flows to come on. So to take us deeper into the important subject, we are fortunate to have Manish Gadia ji, CA Manish Gadia ji, who is an expert and brings up deep practical insight and technical expertise on this subject. So we hope that it is a very investment, kind of time for all of us, where we can actually strategically plan and evaluate the true worth of any enterprise. Thank you so much, Chairman sir, and again back to Rashi for further proceedings. Thank you so much.
Thank you, sir. So we have our speaker for today, CM Manish Gadia ji. He is a fellow chartered accountant with 26 plus years of professional experience and partnership with JMP Associates. As an independent registered valuer with IBBI and ICAI, he specializes in business valuations, merger and acquisition assessments, and financial consulting across the diverse industries. Today's topic for today, as Mr. Harsh sir had already told, is business valuation as per DCF valuation method. And I would like sir to take up this topic.
Thank you. Thank you, Rashi. And first of all, I would like to thank our chairman, Vishnu Tulsian ji, for starting this Golden Charcha and giving me opportunity to deliberate my views and my presentation on cash flow management and what is the importance of cash flow and how to do valuation according to DCF method, discounted cash flow method. So I would like to share my screen first. So let me start. Is my screen visible to all?
Yes, sir.
Yes,
It's
ma'am.
visible.
Okay.
Yeah.
All right. Thank you. So I would like to start with a very important quote of Warren Buffett, who is the legendary investor and very important valuation guru. He is my guru also. So he has taught that whatever we learn, whatever we invest in ourselves, that is the best investment we can make. The more we learn, the more we earn. And Udeshi has rightly pointed out that today we are going to invest 1 hour in our study. So I would like to convince you that the 1 hour will be your best time invested in your learning of valuation principles and cash flow management, cash flow valuation method. So first, I would like to begin with the understanding of valuation. What is valuation? So everybody, we all know valuation means in our general day-to-day working, that valuation and price we normally call it together, but valuation is different, altogether different. In valuation, we try to determine or try to estimate the economic value or fair value of a business enterprise. What is its true worth of any business enterprise, that we try to estimate, and it is very much required for any kind of transaction happening or any kind of deal making or any kind of merger, amalgamation, acquisition, or any kind of future potential, future earning potential of a company. It depends on lot of factors also. So in today's webinar, we are going to understand how the cash flow affects the valuation. So like I told you that valuation is required in lot of transaction like selling or buying of a business. It helps the owners to understand the true potential and true fair value of a company. It helps in merger and amalgamation acquisitions like fundraising. It helps investors and the investor and the business owner before taking an investment decision. What is the true value of a company? It is also required in case of legal and taxation matter, in case of regulatory compliance also, and it is very much required in case of any kind of strategic decision making. Like it helps management to understand what is the true value and what is the strength of a company, and the areas of improvement, what the company can do to improve the value of a company. Normally, there are three kinds of valuation methods. First is assets valuation method, asset-based valuation method. That is, we all understand what is the assets and liabilities of a company. Because we being chartered accountant, we understand the balance sheet of a company. So normally it is based on the balance sheet of a company. That we, in case of index company, we do fair value of a company of all the assets and liabilities. So in case of assets approach, we deduct liabilities from the assets of the company. Then it is called a fair value of a company according to assets-based valuation method. Second and most important valuation method that is very much respected in valuation fraternity or business fraternity to arrive at any valuation, that is income approach method. In case of income approach, we normally do projections of a company. That is very, it can be a startup company also, it can be a matured company also, it can be any kind of company. If it is a running business company, then we do future projections for the company, and then we calculate the free cash flow from that future projections and arrive at the net present value by properly discounting it from the proper discounting method, discounting rate. And third, this is also very important method in case of a matured company or listed company, market approach method. In this, we try to get any similar company data from the listed company or any company which for which any transaction has happened in past. So we try to get any kind of multiple of these listed companies, and then we try to apply those multiples in our entities where for which we want to do valuation. Like it can be P multiple, EBITDA multiple, it can be sales to valuation multiple, or any different kind of multiples we apply normally. So these are the three valuation approaches which is very important for any kind of valuation understanding. Now we are coming straight to our valuation cash flow method. What is cash flow? Cash flow is as the name suggests, it is the flow of the cash. It is the flow of a cash or cash equivalent in any business enterprise. कोई भी company में profit statement we normally check what is the profit margin, what is the profitability of a company, but it is the true value, means it is the cash flow which reflects the true value of a company. Because profit तो हो सकता है कि कोई कंपनी में थोड़ा एडजस्टमेंट हो गया है ड्यू टू अकाउंटिंग पॉलिसी या मिसमैनेजमेंट है या फिर कुछ अदर फ्रॉड्स वगैरह भी हो सकते हैं जिसमें प्रॉफिट को आप बढ़ा सकते हैं. मीन्स अगर सपोज करिए आपका प्रॉफिट कोई कंपनी में अभी नहीं है तो आप हो सकता है कि मार्च एंडिंग में ज़्यादा टर्नओवर दिखा दिए, मार्च एंडिंग में आपने डिस्ट्रीब्यूटर को माल सप्लाई कर दिए हैं, उससे प्रॉफिट आ जाएगा. बट उसका सपोज करिए अगर कैश रियलाइज नहीं हुआ तो इट डज नॉट रिफ्लेक्ट योर ट्रू पोजिशन. So cash flow is the main element and main statement of any company which reflects the true position of a company. It is called the lifeblood of an organization. And just like but cash flow में ये एक important factor है कि जैसे blood का एक pressure maintain करना important है. We have to maintain a proper pressure of our blood in a human body. Likewise, we have to maintain a proper cash in a company. Neither the higher very high cash flow in a company and nor very low cash flow in a company is helpful, and it is very healthy for the company. So we have to maintain proper cash. हो सकता है कोई कंपनी में केस है वो पॉजिटिव है या नेगेटिव है, दैट डजंट मैटर कि कंपनी हेल्दी है या नहीं है. टुडे वी आर गोइंग टू अंडरस्टैंड कैसे कोई कंपनी का कैश फ्लो चेक किया जाता है एंड व्हाट आर द डिफरेंट पार्ट्स ऑफ ए कैश फ्लो. नॉर्मली कैश फ्लो इज मेंटेन्ड by three components. One is our operating cash flow, that is called cash flow from operation. Second is our financing activity cash flow from financing activity. Third is investing cash flow, means cash flow from investment activity. That we all understand. कि cash flow में तीन पार्ट होते हैं, operating activity, financing activity, investing activity. Operating activity में normally we do all kind of operating part, like कोई भी कंपनी में अगर सेल्स है, टर्नओवर है, एक्सपेंसेस है, परचेज है, या फिर वर्किंग कैपिटल इंक्रीज या डिक्रीज है, तो ये दीज ऑल पार्ट्स कम इनटू ऑपरेटिंग एक्टिविटी. तो इसको हम लोग एक प्रॉपर एग्जांपल के साथ में भी एक्सेल में वर्किंग करके देखेंगे कि हाउ टू डिराइव द कैश फ्लो फ्रॉम ऑपरेटिंग एक्टिविटी. सेकेंड इज आवर कैश फ्लो फ्रॉम फाइनेंसिंग एक्टिविटी. So financing activity comes from the finance, like if any company accept any kind of loan, अगर कोई कंपनी में कोई लोन आ रहा है या फिर कोई जो प्रमोटर है दे हैव इन्वेस्टेड इन द कंपनी, अगर कोई इक्विटी इन्वेस्टमेंट आ रहा है, प्रेफरेंस कैपिटल आ रहा है, डिवेंचर आ रहा है कंपनी में, तो दीज आर कॉल्ड मींस कैश फ्लो फ्रॉम फाइनेंसिंग एक्टिविटी. इट कैन बी प्लस आल्सो, इट कैन बी माइनस आल्सो. हो सकता है लोन हमने रिपेमेंट ही कर दिया है कंपनी के थ्रू, तो वो भी इट कैन बी पॉजिटिव और नेगेटिव. सो व्हाट इज द सिग्निफिकेंस ऑफ ऑल दिस कैश फ्लो, दैट विल अंडरस्टैंड कि अगर फाइनेंस एक्टिविटी से अगर फंड आ रहा है तो क्या कंपनी के लिए पॉजिटिव है या नेगेटिव है. देन वी आर कमिंग टू कैश फ्लो फ्रॉम इन्वेस्टिंग एक्टिविटी. इन्वेस्टिंग एक्टिविटी मीन्स कि कंपनी हैज इन्वेस्टेड इन एनी अदर बिजनेस वेंचर, इन एनी सब्सिडरी और जॉइंट वेंचर, और इट कैन बी इन्वेस्टमेंट इन एनी लैंड एंड बिल्डिंग, प्लांट एंड मशीनरी, or company has invested, expanded its business. So there can be lot of things which can affect the cash flow, like but हो सकता है कि company has sold its surplus assets also, like कोई company का कोई extra land parcel है, company has sold its assets, so that can be helpful and beneficial for the company. So like too much cash is also not very beneficial, and too less cash is also not very beneficial. Company has to maintain a proper cash flow at proper level. So why cash flow is critical for business valuation? Because it reflects the sustainability of the company. Profit कोई कंपनी का हो सकता है कि बहुत ज्यादा है, but still those company can fail. And lot of time it has happened in past कि किसी कंपनी का बहुत ज्यादा प्रॉफिट है, but still those companies has failed and those company has been wiped out because those companies are not sustainable. Company has huge profit, but those companies can be that those companies are not sustainable because of its poor cash flow management. So cash flow management is the most important part in any business enterprise. Second is the cash flow is important for discounted cash flow valuation analysis also, because अगर कोई, because discounted cash flow is the most respected and true valuation method, and it reflects the intrinsic value of a company. So while doing the discounted cash flow valuation analysis, we need the cash flow to derive the present value of any future projected cash flow. And cash flow is better indicator than profit, because company can have higher profit amount, but still there can be that these all profit has been stuck in working capital or in any repair maintenance of the plant and machinery or any investment in any existing business. So or it can be that profit can be manipulated a lot of time due to accounting policies, but real cash flow shows the real liquidity of a company. So cash flow is more important than profit, and it is helpful for the lender and investor perspective also, because lender and investor take lot of decision based on cash flow, like what is the ability to generate returns of the company, and what is the risk taking potential and risk taking appetite of the company, and repayment capacity for the debt. So cash flow helps to take decision and analyze all these things, and it is very helpful in case of decision making also. Lot of time company has to invest in new business venture, so cash flow helps to understand and assess whether the company can invest in new business venture, or in case of any merger acquisitions, or whether the company can declare its dividend in the current year. So cash flow helps in taking any dividend policy matter, and in case of any working capital requirement also, cash flow is very important. So for all the business activity, cash flow is the most important and most crucial part of any business enterprise. So likewise, I explained you already that there are three types of cash flow: operating cash flow, investing cash flow, and financing cash flow, that we are going to discuss in detail in our Excel presentation. And while doing valuation according to discounted cash flow method, there are type of discounted cash flow method working. One is FCFF and second is FCFE. So what is FCFF? Means free cash flow to the firm. So free cash flow to the firm means we are doing valuation for the whole enterprise, including debt part also. So in case of FCFF, we are discounting the projected cash flow according to WACC WACC. So WACC is our weighted average cost of capital, because in case of FCFF, we are including debt part also. So in case of discounting, we are going to discount the whole cash flow with the WACC, that is weighted average cost of capital. So what is weighted average, how to calculate WACC, that we also understand in our later presentation. And second cash flow is our free cash flow to the enterprise, to the free cash flow to the equity shareholder. So in our FCFE, we discount the cash flow according to cost of equity, KE. So how to calculate KE and how to calculate WACC, that we'll understand in our future later on presentation in our Excel sheet. So to calculate KE, we are having a formula that is called CAPM method, capital adequacy pricing model. So CAPM, according to CAPM model, we calculate cost of equity, and to calculate WACC, we normally do proportionate of cost of equity and cost of debt. So factor which affects the valuation very much. There are a lot of factors which affects our valuation, which affects our cash flow also, and valuation methods. So like these are the important points which affects our valuation, like book value. If the company is having higher fair value, means through assets method, then the company will be having more value of a company. And next important point is our earning and profitability. So if the company is having higher earning and profitability, the company will be having higher valuation. And these are the important points which affects valuation at a great extent, like future growth prospects, company size and scale, industry sector and its performance, market and economic condition, management quality and governance, market sentiments, regulatory environment, global and geopolitical factors. So these are very important points and factors which affects the valuation. So there are a lot of complexities also in valuation which affect the valuation, because in case of small and medium company, we are having very limited market data and financial information, and in case of a small company, we are having very much less transparency and lack of marketability, subjectivity in valuation approach, which valuation approach to be used, like it can be finance assets approach or income approach or market approach. So which approach to be used in case of any valuation, that is very subjective. Control and minority interest, non-operating assets and liabilities. There can be lot of non-operating assets and liabilities. What to do about those non-operating assets and liabilities, that is very important. Future growth prospects is very important while doing valuation. What will be the future growth? Because future is very uncertain. Nobody know what will be the future. So while doing valuation, we need to do future growth prospect also. We need to fix or determine the what will be the future growth of a company. And sometime in lot of time biasness and conflict of interest also arises while doing valuation. Lot of tax consideration matter is also happen, and there is it can be a lot of time it happens that the all business ventures are unique business venture, and sometimes it happens that every business enterprise comes that I have a unique business model. So according to that business model, we have to calculate the future projection and do our valuation analysis. And management quality is also very important while doing valuation. So these are very important factors, and these are the factors which affects our valuation. And now we are coming to factors which affects our valuation according to DCF method. So कौन से ऐसे फैक्टर है जो हमारे डिस्काउंटेड कैश फ्लो मेथड वैल्यूएशन एनालिसिस को अफेक्ट करते हैं? अगर कोई भी किसी भी पर्सन को अभी तक कोई क्वेरी है तो कोई अपना मीन्स दे कैन रेज देयर क्वेरी इन द क्वेरी बॉक्स. क्वेरी अभी तक तो नहीं है, ठीक है. So now we are coming to cash flow method. Cash flow method में friends, first and foremost we need to do a projections of the company, future projections. ये projection कितना साल का करना है, that is very subjective. वो depend करता है company to company and sector to sector, business enterprise to enterprise. It can be for 3 years. Sometimes if the company is very much matured and very much old company, and then it can be 3 years, and sometimes it can be 5 years. If it is a growing company like a startups company, then we can do sometimes 7 year or 10 year projections also. So time horizon is very subjective. How much years we need to do projections, that is also very subjective. So वो कंपनी के साथ में डिस्कस करके, मैनेजमेंट के साथ डिस्कस करके प्रॉपर प्रोजेक्शंस बनाना पड़ेगा. Either the company can provide us the projections. Normally companies would provide the projections, and we can do some minor analysis or उसको एक subjective check कर सकते हैं अपने. But normally management should provide the projections because they are the best judge of their business. So projection करने के बाद में we need to do the working capital analysis. Working capital means what will be the working capital requirement of the company to achieve this cash flow. So for doing working capital analysis, we need balance sheet, and balance sheet से we can do what is the incremental working capital requirement. Suppose कोई company का working capital requirement इस साल 10 करोड़ रुपया है, तो अगले साल हो सकता है उसको 12 करोड़ का वर्किंग कैपिटल रिक्वायरमेंट है, तो द इंक्रीमेंटल वर्किंग कैपिटल रिक्वायरमेंट विल बी 2 करोड़. सो दैट वी नीड टू कंसीडर कि व्हाट विल बी द इंक्रीमेंटल वर्किंग कैपिटल रिक्वायरमेंट एंड व्हाट विल बी द कैपेक्स रिक्वायरमेंट, मींस हाउ मच अमाउंट इज रिक्वायर्ड टू इन्वेस्ट इन द बिजनेस टू जनरेट दिस कैश फ्लो. मींस हो सकता है कोई कंपनी का रिपेयर मेंटेनेंस का खर्चा है, या फिर उसको एक बिजनेस सस्टेन करने के लिए कुछ कैपिटल एक्सपेंडिचर करना ही पड़ेगा. So that is very much important part of a cash flow analysis and discounted cash flow method. कि कंपनी को कितना कैपिटल एक्सपेंडिचर करना important है to generate this cash flow. That we need to analyze and means report in our cash flow. And next is our what we are going to do. We are going to do future free cash flow to the firm or free cash flow to the equity shareholder. That is a very important part कि हम लोगों को decide करना है कि हम लोग cash flow जो बना रहे हैं discounted cash flow method से, वो cash flow method वो FCFF है या FCFE है. So normally we do FCFF, means first we do valuation of the whole enterprise, then उसमें से debt part को we deduct the debt part and arrive our enterprise value. So वो कैसे होता है वो हम लोग Excel में समझेंगे. So we have half hour right now, so I'll take more 10 minutes or 5 minutes, then we'll come to Excel part. And discount rate is the most important part in any DCF method. So discounted cash flow, there are two elements of discount rate. First is our cost of equity and second is our WACC. So cost of equity कैसे calculate करते हैं और WACC कैसे calculate करते हैं, that will understand. And it depends on the company's risk profile, market condition, equity risk premium, and specific project or investment. So cost of equity or WACC depends on lot of factors. It means this is the most important part, at what rate we need to discount our cash flow, because कोई कंपनी में हो सकता है कि प्रॉफिट 10 करोड़ का है और उसको डिस्काउंटिंग अगर हम लोग मान लीजिए 10% से करते हैं तो उसका वैल्यूएशन सपोज करिए 100 करोड़ हो जाता है. बट इफ यू डिस्काउंट इट एट 12%, then the valuation will be less. If you discount it at 15%, then the valuation will be very much less. So at what discounting factor we need to discount the cash flow, that is very important decision and very much subjective and judgmental decision we need to take. Next important part is to arrive at calculate the terminal value of a company. To calculate the terminal value, need to fix the growth rate that we have already discussed कि कोई भी कंपनी का कितना growth rate होने वाला फ्यूचर में, that we need to discuss and arrive at this growth rate properly. And tax implication is also very important part in discounted cash flow, and we have to do all this analysis in a consistency manner and realism manner, because अगर कोई प्रोजेक्शन हम लोग बना रहे हैं देख रहे हैं तो उसमें कंसिस्टेंसी होनी चाहिए और रियलिस्टिक होना चाहिए. ऐसे नहीं कि हवा में कुछ भी बना दिए और वो हो जाएगा, बिकॉज इन फ्यूचर द कंपनी शुड अचीव इट्स फ्यूचर प्रोजेक्शन. एंड लास्ट we need to do sensitivity analysis also, like जो भी प्रोजेक्शन बनाए हैं आपने और या फिर जो भी ग्रोथ रेट लिए हैं या जो भी डिस्काउंट रेट लिए हैं, उसका सेंसिटिविटी एनालिसिस भी वी कैन डू. CAPM मेथड का फॉर्मूला, दिस इज द फॉर्मूला. CAPM मेथड मीन्स cost of equity. So cost of equity में first we need to take the risk-free rate of any government bond or any kind of long-term bond. It can be 10-year, 15-year or 20-year bond also. That is available, readily available at the website. We can take a 10-year SBI bond or RBI bond or 15-year bond. Then we need to add the risk premium, equity risk premium or market risk premium. तो मार्केट रिस्क प्रीमियम कैसे निकालते हैं कि जो भी मार्केट रेट ऑफ रिटर्न है, एक्सपेक्टेड मार्केट रेट ऑफ रिटर्न है, या इन पास्ट जो इकोनॉमी में एक मार्केट रेट ऑफ रिटर्न आया है, उससे हम लोग रिस्क फ्री रेट जो माइनस कर देते हैं, दैट इज कॉल्ड इक्विटी रिस्क प्रीमियम और मार्केट रिस्क प्रीमियम. तो रिस्क फ्री रेट में अगर हम लोग इक्विटी रिस्क प्रीमियम जोड़ देते हैं और उसको बीटा से मल्टीप्लाई कर देते हैं. बीटा इज व्हाट इज Beta is systematic risk factor associated with the risk, with the industry and company. So every company has some risk factor. It can be associated with its industry, or it can be associated particularly with the company also. So whatever the risk-free rate plus risk premium is there, we need to multiply it with the beta, means risk added with the that particular company. And in that cost of equity, we add the alpha. Alpha means specific risk to the company specific risk factor we add. So that is by this formula we arrive at the cost of equity. And what is WACC? WACC is nothing difference but proportion of the cost of equity and cost of debt. So we'll discuss in our Excel calculation. That will be very easy. So there are a lot of purpose where valuation is required. So I think, and now we are coming to valuation presentation in our Excel. So in my this presentation, I'm showing you this cash flow from operating activity. Suppose the company is having 100 lakhs sales and purchase and expenses is 60 lakh. So company is having profit before tax and depreciation, that is 40 lakh. So depreciation, suppose depreciation is 10 lakh and interest is 5 lakh. So profit before tax is 25 lakh and tax is 5 lakh. 20% I have taken. So profit after tax is 20 lakh. So in this theme, our cash flow from operation suppose in this working calculation we are showing our cash flow is profit before tax is 25 lakh and depreciation is 10 lakh and interest is 5 lakh. But interest we have to deduct tax part also for calculating free cash flow. So suppose I have taken 20% interest tax rate. So my interest post tax is 4 lakh rupees. So total inflow is 39 lakh rupees. Profit before tax, depreciation and interest we are adding. So our total inflow is 39 lakh rupees. And working capital requirement I have calculated here. So suppose my total current assets at the first year, means at the beginning of the year, is 20 lakh and current liability at the beginning of the year is 10 lakh. So my working capital is 10 lakh rupees and my working capital at the end of the year is 18 lakh. Working capital 30 minus 12 is 18 lakh. So my capital requirement, working capital requirement is 8 lakh rupees. So this is means 18 minus 10 is 8 lakh and I have calculated it for 3 years, 8 lakh, 8 lakh, 9 lakh. That will discuss how to calculate the cash flow for future projections. Then we'll arrive at the valuation. And suppose my capex requirement to generate this cash flow is 10 lakh and tax requirement is 5 lakh. So total outflow is 23 and my free cash flow to the firm is 16 lakh. So in this analysis, my PAT was 20 lakh, but my free cash flow is 16 lakh. So you can see that free cash flow and PAT, it is not necessary कि cash flow और PAT same रहेगा. Normally it happens कि कोई भी कंपनी का अगर प्रॉफिट है और वो कैश फ्लो उससे ज्यादा भी हो सकता है और कम भी हो सकता है. बट एट द लॉन्ग टर्म बेसिस, मान लीजिए 5 साल या 10 साल 20 साल के अंदर में अगर इसको टोटल करते हैं तो द कैश फ्लो एंड प्रॉफिट शुड मैच. कि जितना भी लॉन्ग टर्म में जाएंगे, मान लीजिए 10 साल का अगर आप कोई भी कंपनी का लिस्टेड कंपनी का आई विल शो यू सम एग्जांपल हियर. कोई भी कंपनी का अगर 10 साल का प्रॉफिट लेते हैं और 10 साल का कैश फ्लो लेते हैं, ऑपरेटिंग कैश फ्लो लेते हैं, तो नॉर्मली आइडियली इट शुड मैच. बट इन सम ईयर इट कैन हैपन कि कुछ साल में ऑपरेटिंग कैश फ्लो ज़्यादा है, कुछ साल में प्रॉफिट ज़्यादा है. इट हैपेंस. और यहाँ पे हम लोग डिस्काउंटिंग फैक्टर, सपोज आई हैव टेकन 15% discounting factor I have taken. So my discount rate is 0.87 and my net present value for this first year is 13.91. So, and this is the cash flow calculation, means discounted cash flow calculation. Now we are taking a full complete example how to do valuation according to discounted cash flow method. So this is the example, friends, of any company I have taken. Suppose this is the profit loss account. Normally we get it from the clients. This is our revenue from service and other income. This is our cost of goods sold, employee expenses, and other expenses. This is our PBDIT, and depreciation part is coming from the balance sheet part. So this is our PAT. And now this is our balance sheet. We normally understand the balance sheet and profit and loss account very much. So this is our discounted cash flow. So now we are coming to WACC analysis. WACC analysis में friend, जैसे I already explained you कि we take risk-free rate. First we take risk-free rate of to calculate any cost of equity or WACC. So इसमें हम लोग I have taken suppose 10-year bond yield from historical data. So इसमें 6.76 currently it says risk-free rate on 31st March 25 was 6.76%, and right now also it's similar. And risk premium, how to calculate risk premium? Suppose in this market rate of return, we calculate market return. So इसमें हम लोग first we take the benchmark, means Sensex benchmark, और अभी currently the Sensex is 77,400, and we calculate the CAGR of the Sensex, that is 15.55%. So if we deduct 15.55 risk-free rate from the market return, then our equity risk premium is 8.79. So you can see it from this calculation. Our market rate of return is 15.55, and I have taken Sensex here. You can take Nifty data also, and normally I have taken it last, suppose 45-year data. You can take here 20-year, 25-year, or 30-year data also. Normally it should come around 15 or 15.5%. So this is our equity risk premium. Now we are coming to beta. So normally in a small company where any listed data is not available, we take risk beta risk as 1. But in case of a large company, we can take the industry risk, industry beta also, and normally we should take 3-year industry beta, 3-year beta of any company. So in case of a small company also, we can take Aswath Damodaran data there. Aswath Damodaran data is given in the Aswath Damodaran site. So in case of beta also, Aswath Damodaran is doing a lot of favor, and he normally prepare 106 industry analysis for all the listed company in India. So from there also we can take beta from Aswath Damodaran data. Then it is coming to our equity, cost of equity. Then I add the alpha of the company. Alpha means specific risk premium to the company. Normally I take 2% to 5%, 10% risk premium for the company, for any company. So now it's our adjusted cost of equity is 20.5%. So 20.5% is my cost of equity. Suppose 20.5% is my cost of equity is coming from this data. And now we are coming to cost of debt. So my cost of average interest rate, suppose 10% is there, and my tax is 25%. So my cost of debt after tax is coming to 7.48%. So in this particular example, suppose my equity is coming in negative part, means equity is in loss actually. So equity is in negative. So and my debt is also very much high. So in long term, I've taken 50-50. Means my cost of equity will be 50% proportion and the cost of debt will be 50%. So it depends if the company is in positive and suppose 80% is the equity and 20% is then remaining will be the debt. So it everything depends on the real data. So suppose I have taken 50-50 means my cost of equity is 10.28%, means 50% of 20.5%, and my cost of debt is 7.48%, 50% means 3.74%. So my total WACC is coming to around 14.02%. So this is my actual WACC. Now we are coming to my total discount rate. Discount rate is 14.02% is coming from here. And growth rate in this company, suppose it's a technology based company, so I have taken 4% growth rate. So this also depends on a lot of factors like industry, sectors, and economy, what is the future potential, and lot of other factors. So normally we take 2% to 5% growth rate for a to calculate terminal growth, terminal value. So in this case, suppose our profit before tax is coming from the PL part. So our profit before tax is coming here. So profit before tax, then we are adding up non-cash expenses like depreciation. We are adding up, this was our depreciation. So this is the total inflow. And then we are deducting the working capital. What is the working capital, incremental working capital? Suppose in this case, my incremental working capital is 22,000, and then 6,000, 2,600, 4,000, 3,200. So my total working capital requirement is this to generate this case, and capital expenditure requirement is 30 lakh rupees, 30 lakh, 50 lakh, 25 lakh, 25 lakh. So in last year also we normally take whatever is the previous year capital expenditure, or we can take the depreciation part also. Whatever is the last year depreciation, we normally take depreciation as the capex requirement in terminal year. So now friends, this is my income tax part. Income tax part I have calculated because it was a loss making company in the initial year. So in terminal year I have taken the 25% tax rate. So till now, if anybody have any query, please raise your query in the query box. Why interest is 4% instead of 5? Okay, good. So in case of Mr. Rakesh Gupta has raised a query, why interest is 4 instead of 5? In case of interest, we do interest post tax. Here, this is our interest 5, and we are deducting 20% tax from this 5 because this 5 is our interest, but we have to add this interest post tax to calculate the WACC, because we are calculating free cash flow from the firm to the firm. So to calculate WACC, means to discount the cash flow by WACC method, we have to deduct the tax part from the interest. So I hope I am clear, and we can calculate in Excel also. If you do interest without taxation, then the cash flow will be higher. That is not correct.
So there's another question by Ranjan Giri. They're asking you to.
Okay, please.
It's in the Q&A part.
Okay, please tell me.
They're asking you to kindly guide us on considering change in working capital.
Incremental change in working capital. You are asking me incremental change in working capital?
I guess so. Yes,
Okay.
sir.
Okay, let me explain. Okay, thank you. Okay, so we are coming to incremental, how this incremental change in the working capital is calculated. Suppose this is your balance sheet. Balance sheet part we all understand. Okay, so now we are coming to incremental working capital. In incremental working capital, we take the total of the current assets, all the current assets only, not non-current assets. Suppose in this case, I am having inventory, trade receivables, short-term loan advance, and other current assets. These are my current assets. So I did not take any long-term loan advance or any other non-current assets, because these current assets affects my cash generation capacity. Whatever the cash I am generating from my operating activity, these are the items which affects my cash generation. So I have added up all these 4 items. Suppose this is my 4 items, and I have done this thing for all the years, and now I'm coming to current liabilities. So suppose this is my current liabilities. In current liabilities, my trade payables are there, short-term provisions are there, short-term borrowings I have taken in debt part actually, that's why I have not added up, and कोई इसमें amount भी नहीं है actually में, but अगर होता भी तो मैं उसको डेट पार्ट में रखता हूँ. शॉर्ट टर्म बोरिंग या लॉन्ग टर्म बोरिंग है, that is my debt, that is not part of current liability. So and other current liability I have added up. So these are my current liability. Okay, so this is my current liability. So इसको भी सारी ईयर में कॉपी पेस्ट मारना है. देन जो वर्किंग कैपिटल इज माय करंट एसेट्स माइनस करंट लायबिलिटी, वो हम लोग को सबको पता है कि करंट एसेट्स माइनस करंट लायबिलिटी इज माय वर्किंग कैपिटल. हो गया. अब 2 साल में सपोज करिए कि आई एम यहाँ पे आपको 27-28 और 26-27 में बता रहा हूँ, क्योंकि वो माइनस में फिगर है इसलिए आप समझ जाएंगे. यहाँ पे मेरा रिक्वायरमेंट है 38 लाख रुपीज इज माई वर्किंग कैपिटल इन 27-28, एंड 26-27 में माई वर्किंग कैपिटल रिक्वायरमेंट इज 12 लाख रुपीज. सो इंक्रीमेंटल वर्किंग कैपिटल रिक्वायरमेंट कितना है मेरा, मीन्स आई नीड 26 लाख मोर इन 27-8 देन द प्रीवियस ईयर. यहाँ पर अगर किसी को कोई क्वेरी है तो अगेन दे कैन राइट इन क्वेरी बॉक्स.
So they're asking why do we need to consider the change in working capital?
Okay, great question. So working capital change is considered due to that it affects my cash flow. अगर मेरे को जो कैश जनरेट करना है, अगर वो सारा पैसा वर्किंग कैपिटल में स्टक हो जाता है तो मेरा कैश जनरेट नहीं होगा. सपोज करिए, इसको एक एग्जांपल से समझते हैं. सपोज करिए कोई कंपनी 100 रुपीज का सेल की है, ठीक है, और उसका पूरा पैसा अगर उसको मिल गया फर्स्ट ईयर में, तो उसका कैश फ्लो क्या होगा, 100 रुपीज होगा. बट सपोज करिए नेक्स्ट ईयर में उसका 100 रुपीज सेल है, बट वो 50 रुपया ही उसको मिला है, 50 रुपया उसका डेटर्स रह गया है, तो उसका कैश फ्लो कितना होगा, कैश फ्लो विल बी 50 रुपीज ओनली. एंड थर्ड ईयर में सपोज करिए, थर्ड ईयर में अगेन वो 100 रुपया का सेल किया, बट उसका मीन्स डेटर्स है 30 रुपीज. तो यहाँ पर क्या होगा थर्ड ईयर में, क्योंकि उसका डेटर्स है 30 रुपीज, सॉरी 30 रुपीज, डेटर्स इज 30 रुपीज. फर्स्ट ईयर में डेटर्स है 50 रुपीज. हम लोग एक एग्जांपल बना लेते हैं यहाँ पे, बेटर है. सेल डेटर्स, सपोज करिए फर्स्ट ईयर में डेटर्स 0 है, सेकेंड ईयर में 50 है डेटर्स, थर्ड ईयर में 30 है, फिर 40, 20, 80. ठीक है, ये डेटर्स है और देयर इज नो लायबिलिटी. सपोज लायबिलिटी इज नील, लायबिलिटी 0 आई हैव टेकन. यहाँ पे आप देखिए कि वर्किंग कैपिटल कितना होगा कंपनी का, व्हाट विल बी द वर्किंग कैपिटल. this assets minus liability, means current assets minus current liability. This is my working capital. Yeah, means liability is 0, so my debtors is my working capital. So my cash flow in the current year, how much cash flow? Suppose this is my cash flow. फर्स्ट ईयर में 100 रुपया है, फिर नेक्स्ट ईयर में 50 रुपया है, 70 रुपया, 60 रुपया, 80 रुपया, 20 रुपया, बट भाई कैश फ्लो, फ्री कैश फ्लो कितना होगा? अच्छा, यहाँ पर हम लोग इंक्रीमेंटल वर्किंग कैपिटल कितना होगा हमारा रिक्वायरमेंट? इंक्रीमेंटल वर्किंग कैपिटल आप देख सकते हैं कि फर्स्ट ईयर में माई इंक्रीमेंटल वर्किंग कैपिटल रिक्वायरमेंट वाज 50, बट सेकेंड ईयर में क्योंकि डेटर्स कम हो गया था तो वो इंक्रीमेंटल वर्किंग कैपिटल रिक्वायरमेंट वाज -20, और थर्ड ईयर में अगेन 10, फिर -20, 60. सो माई फ्री कैश फ्लो, अच्छा इसमें जैसे सेल्स है और मान लीजिए एक्सपेंसेस, नेट प्रॉफिट, एक्सपेंसेस सपोज करिए 40 है, incremental working, my net profit is 60 and working capital requirement 0. Sorry, so this is my free cash flow. प्रॉफिट वाज माई 60, बट यहाँ पर आप देखिए कि प्रॉफिट वाज माई 60 वाज माई प्रॉफिट, बट यहाँ पे डेटर्स में मेरा 50 रुपीज अटक गया था, तो माई फ्री कैश फ्लो वाज ओनली 10. फ्री कैश फ्लो वाज 10 इन सेकेंड ईयर, बट थर्ड ईयर में मेरा 80 हो गया क्योंकि मेरा वर्किंग कैपिटल जो है वो माइनस हो गया था रिक्वायरमेंट. So my actual cash flow was 80, but my profit was 60 only. तो कैश फ्लो का यही एक मिरेकल है, या आप समझ लीजिए सरप्राइज है, कि कैश फ्लो इज नॉट इक्वल टू योर प्रॉफिट, बिकॉज कैश फ्लो में हमारा वर्किंग कैपिटल का पार्ट इट स्टक्स लॉट ऑफ टाइम. हो सकता है कि लॉट ऑफ टाइम यू विल सी कि आपका जो कैश फ्लो है दैट इज equal to your profit. Sometime it is less than your profit, sometime it is more than your profit, but अब हमको डिस्काउंटिंग जो करना है, so this is my actual cash flow. हमको अगर बिजनेस वैल्यूएशन करना है इसका, so I have to discount this cash flow, not the profit, because profit is not showing my true picture, my intrinsic value, but my cash flow shows me the true value, true intrinsic value, because lot of time it happens कि हमको इंटरेस्ट पेमेंट करना है या रिपेयर मेंटेनेंस का पैसा लग जा रहा है, कैपिटल एक्सपेंडिचर लग जा रहा है, वर्किंग कैपिटल में कुछ पैसा फंस जा रहा है, तो आई हैव टू check all these factors to understand the free cash flow. I hope that I am clear. अगर अभी भी किसी को कोई query है तो they can ask.
So there's another query. If interest is post tax, why not depreciation is post tax?
देखिए, depreciation is not outflow. Depreciation is only capital, means fixed assets का adjustment हो रहा है. It is not going out. So interest is actually going out. So that's why depreciation को we add all the means total depreciation to arrive at the free cash flow. But जो interest है, interest because we are paying interest and we are getting benefit out of this interest, means tax benefit मिल रहा है हमको interest payment करने से, so that's why we are deducting interest means tax from the interest. अच्छा 20% तो I just means assume किया हुआ है 20%. Also tax rate is 25%, whereas for interest 20% is considered as there any specific reason. This is just assumption only. So actual tax rate can be different, 25% भी हो सकता है, 30 भी हो सकता है. But I will just for the sake of means easiness, I have considered 20%. So इसमें कोई और क्वेरी है किसी का? टर्मिनल, अच्छा आई एम शोइंग यू टर्मिनल वैल्यू कैलकुलेशन आल्सो. तो टर्मिनल इन लास्ट ईयर वी कैलकुलेट द जो भी हमारा कैश फ्लो है, लाइक प्रॉफिट है, डेप्रिसिएशन है, या वर्किंग कैपिटल रिक्वायरमेंट है, या कैपेक्स है, वी नॉर्मली टेक व्हाट एवर वाज द इन द लास्ट ईयर. बट जो कैपेक्स है नॉर्मली वी टेक इट ऑफ आवर लास्ट ईयर डिप्रिसिएशन. जितना भी लास्ट ईयर में डिप्रिसिएशन है वी नॉर्मली टेक दोज फिगर्स. और जो भी हमारा कैश फ्लो, मान लीजिए ये नेट कैश फ्लो हो गया इन टर्मिनल ईयर, जो इनफ्लो माइनस आउटफ्लो, दिस इज माय नेट कैश फ्लो. इसको हम लोग डिस्काउंट करते हैं विद द लास्ट ईयर डिस्काउंटिंग रेट. बट इसके पहले वी कैलकुलेट द टर्मिनल वैल्यू. टर्मिनल वैल्यू का फॉर्मूला क्या है कि लास्ट ईयर का जो इनफ्लो है, नेट इनफ्लो, इनटू आवर 1+ ग्रोथ रेट डिवाइडेड बाय वेक माइनस ग्रोथ रेट. तो आई होप ये फॉर्मूला आपको याद रखना पड़ेगा कि जो भी आपका लास्ट ईयर का जो नेट फ्लो है, नेट कैश फ्लो है, इनटू 1+ ग्रोथ रेट डिवाइडेड बाय वेक माइनस ग्रोथ रेट. So that is our terminal value, and now we are going to discount it, this terminal value from the last year discounting rate. जो भी हमारा लास्ट ईयर में था यहाँ पे 0.55, वो डिस्काउंटिंग रेट से हम डिवाइड कर दिए. तो ये हमारा टोटल टर्मिनल वैल्यू आ गया. तो दिस इज माय टोटल एंटरप्राइज वैल्यू. अब एंटरप्राइज वैल्यू में वी नीड टू मेक फ्यू एडजस्टमेंट. इसमें अगर जो भी हमारा सबसे पहले तो जो भी कैश इन हैंड है, कैश इन हैंड या कैश इन बैंक का, वो ऐड कर देते हैं. बिकॉज जो भी जिस डेट में हम वैल्यू कर रहे हैं उस दिन में जो भी हमारे पास कैश इन हैंड है उसको ऐड करते हैं. प्लस कुछ नॉन ऑपरेटिंग असेट्स है, लाइक इट कैन बी योर इन्वेस्टमेंट इन एनी अदर सब्सिडरी वेंचर और एनी काइंड ऑफ सरप्लस एसेट्स इज देयर. नॉन ऑपरेटिंग सरप्लस एसेट्स है, उसको हम लोग ऐड कर देते हैं यहाँ पे. so then it become our adjusted enterprise value. उसमें से एज आई टोल्ड यू दैट हम लोग नॉर्मली वेक कैलकुलेशन करते हैं, सॉरी FCFF कैलकुलेट करते हैं, फ्री कैश फ्लो टू द फर्म. तो उसमें से फ्री कैश फ्लो टू द फर्म अगर कैलकुलेट करते हैं तो बिकॉज वी हैव कैलकुलेट द होल एंटरप्राइज वैल्यू फॉर द होल फर्म, देन वी डिडक्ट द डेट पार्ट फ्रॉम द एंटरप्राइज वैल्यू, देन इट बिकम्स आवर एंटरप्राइज वैल्यू. तो इसमें और कोई क्वेश्चन है किसी को?
So there's another question. They're asking why interest post-tax is considered nil.
Interest post-tax?
Post-tax is considered nil.
In which? Where? In my example or somewhere? In this example you are telling me?
Yes, sir.
So this is actually, this long-term loan was not interest. There was no interest actually on this long-term loan. So that's why only. If there is any interest payment, then we have to calculate interest tax, interest payment. If it is non-interest bearing, so then it can be non-interest bearing also sometimes.
Okay, sir. So they are requesting you to share the Excel presentation in the chat.
Okay, I'll say to you.
Okay.
I'll say to her actually. So he will be saying to you.
Sure, sir.
Definitely, ma'am. I hope I have cleared means free cash flow to the means FCFF and FCFE, and this is my pleasure.
Thank you, sir. Should we conclude the session?
Yeah, ma'am. It is complete from my side. So if anybody having any query, they can ask, or I'll share the PPT also, PPT and this Excel sheet.
So let's just conclude the session since there are no more doubts. I would like to thank you, sir, for such an insightful and comprehensive session. Your experience has truly demonstrated how we can elevate our valuation practices from basic approach to sophisticated methodological like DCF analysis. The practical techniques and real-world application you've shared with us today will undoubtedly help us enhance our accuracy and credibility of the business valuation report. I would once again like to thank our organizing team for their vision in bringing such a distinguished expert to share their knowledge with our professional community. I would also like to thank CA Udeshi to be present here and help in coordinating this session. And thank you all for making this session both educational and engaging.
Thank you, my
Thank
pleasure.
you. Thank you, Manish.
Thank
Yeah.
you.
Thank you,
Thank you,
Rashi.
thank you, thank you, thank
Thank you,
Thank you,
you.
sir.
EIRC team.
Thank you, Harji. Thank you, Rashi.
Thank you, sir. So if you could just share this Excel sheet in the
Yeah, I'll
chat
share to
box.
hers also.
I'll share it with everyone. No issues.
Everyone. Yeah, yeah.
Okay.
Definitely, I'll share by tomorrow only.
Okay,
Yes.
thank you, sir.
Thank you so much. Thank you so much, everyone,
Thank you,
for
Harji.
participating. Thank you so much.